Coming back to that theme of uncertainty generating big opportunities, probably one of the biggest opportunities we still see is China. If we think 18 months ago, there was huge worries around the Chinese economy, and it really circled around two factors. There was a worry about an overbuild in residential and commercial property, and there was a worry that Chinese companies had built up a lot of debt over the past decade, and a lot of this lending was ill-advised and was going to go bad. So wholesale, uncertainty around that market. And really, 18 months on, there's been two major changes that we think are really not being picked up or given due credit. The first is the inventory around commercial and residential property has come right down. It's now at its lowest for the last 5 years. So construction activity fell, though that inventory has been sold, and now you're actually seeing home prices rise quite strongly, and that's very healthy. The other big factor is a lot of that debt was in the Chinese state-owned companies around steel, cement, coal. And what we've seen is the Chinese government has stepped in. They've now forced capacity closures in those industries. And that's had a big price effect on the likes of steel and coal. We've had big price moves in response to those capacity closures. So now those companies are actually making good money again. They're able to service and pay down their debt. So the fears around this wave of bad debt coming out of China has been massively reduced, and that is a huge change, it really is. So we see China as an economy today that is in clear recovery mode, and there's still a massive difference between the rhetoric that we hear in the West around China and the actual results that we're seeing from our companies on the ground. One issue China does have is they have a pollution problem, especially around air quality. You go to China and you can feel it and you can see it. And the issue around air quality has now become a social issue, and the Chinese government is now starting to get very, I think, active around addressing that issue. And one of the things they're doing is putting in big incentives to force the local industry to move from burning coal to burning much cleaner natural gas to deal with their smog issues. So we own a utility company called ENN, and they really benefit from this trend. So ENN essentially own the last mile pipelines. It's a pipeline company that's used to transport natural gas to the cities and the towns. And this company really benefits from two ways. First, there's still a great need to connect up a lot of new cities and towns in China, so there's a lot of need to lay pipe and get remunerated for that. But also, with the coal to gas switching, it's very clear that China is going to consume a lot more natural gas over the next 5 years. So here we have a company on 12 times earnings. It has very little debt, and it's growing at 15% per annum, and we think it can grow for that rate for many, many years to come. And we compare that to Western pipeline companies in Europe and the US. Those companies trade on 20 times earnings, and they're growing far, far slower. So to us, that looks like an interesting opportunity.